Good afternoon, everyone, and welcome to Sidoti's Microcap Conference. My name is Michael Matheson. I'm an equity analyst here with the firm. We're very fortunate today to have the management team from Highland Copper joining us. Before we let them get started, let me cover a couple housekeeping details. The crucial thing is we really encourage questions. That's how the audience and the presenter seem to get the most out of a presentation, is when it's interactive like that. You'll find a Q&A box at the bottom of your screen, so just type your questions in. I'll read them out when we get to the Q&A session, which is the last 5 or 10 minutes of the presentation. With that, let me introduce Barry O'Shea, the CEO of Highland Copper. Barry, please take it away.
Michael, thank you for the introduction, and it's nice to be back at the conference. And let me start by saying that Highland's Copperwood project has 3.7 billion pounds of copper defined and permitted in the United States, so real intrinsic value. But interestingly, development assets often get a little bit overlooked, and I think that creates a really nice valuation opportunity for your investors. And so, of course, our goal is just to drive this project at this point forward at speed to a construction decision, drive into production, and inevitably move towards operating cash flows rather than the pretty significant price to net asset value discounts that we sit at today. And of course, it's asset first through engineering and financing our project, but it's also through corporate restructuring. And I'll walk you through the sale of a non-core asset that put us in a very strong place from a balance sheet perspective to progress our primary project, Copperwood. And when you think then about the tailwinds in the US, particularly around critical mineral strategy and funding that's available for projects like us, and of course, an incredibly robust copper price, I think projects like Copperwood are exactly in the right place at the right time here. Of course, I will make some forward-looking statements, so please bear that in mind. And at the end of the day, we're looking to target a construction decision here in 2026, and that can in turn lead to production in 2029, making Copperwood one of the most nearest dated and candidly advanced copper projects in the US. We're fully permitted, I think an incredible distinguishing factor, feasibility study complete, and we're really putting our money where our mouth is. We've initiated detailed engineering, having awarded all key contracts in 2025. We've put some capital into the ground, about 15 to 20 million in early site work, preparing the site for construction, all, as I say, with a goal to make a construction decision at the tail end of this year. And we're doing it at a time of incredibly strong tailwinds from a US perspective. I'm really pleased with the inroads that we've made in Washington, D.C., because I think it gives us visibility to two things. Number one, converting our letter of interest that we've received from the United States Export-Import Bank. That's for $250 million. That represents the best part of 60% of the capital needed for the project. When that's converted to a binding debt product, it really gives visibility to the overall project financing. It's an incredible distinguishing point for us. And of course, as you begin to move towards having your financing in place, again, it serves to reduce those discounts that you see to net asset value. The reason I feel comfortable about that and some other grant opportunities that we have at the federal level is that we had a really strong mention in a White House publication recently, so in the month of April. We were named alongside 2 or 3 other very strong mining companies as key contributors to US domestic production. So when we're sitting at the likes of the Department of Energy or back at US EXIM, with those federal agencies knowing that we've been tapped to a large degree from the White House, it obviously gives us strong impetus as we look to convert those products. Again, all demonstrating not just capital into the project, but a strong federal endorsement. But as I say, it's project first. So I wanted to take you through Copperwood. Picture there just to demonstrate. While we haven't made a full construction decision as yet, we have done some good early site work, initial site clearing. If you take a look at the right-hand side here, we've largely completed our stream diversion structure to move water around the project area, creating a clean and dry area to construct in the coming year. One of the nice things about the Copperwood project is that it's been worked on for quite a period of time. And so we're really de-risked from a technical perspective. It's a very well understood project. The mineralogy is understood, processing method, and of course the infrastructure. And what it gives rise to out of our feasibility study is an initial 11-year mine life, which candidly we think can be grown, uh, with 30,000 tons of copper produced annually, so 70 million pounds, a really meaningful number when you think about the domestic supply-demand imbalance. And importantly, this is a scale project that we are capable of building, both from an execution and a financing perspective. The total capital for the project is 400 million, and that's why I think you can understand the relevance of that 250 million letter of interest from US Exim. Again, as I say candidly, if this was a 1 billion plus dollar project, perhaps not for us, but this is a project that we can build, and it's a nice scale as we move it forward. Permits are key. One of the biggest de-risking factors for any project. If you're looking at other investments, pre-permitting, of course, you as an investor have a binary call to make as to whether or not a project can get permitted. That's not a call that you need to make for us. These are the 7 permits needed at a state level in order to construct and operate and all in hand. Fortunately, we operate on private land in the state of Michigan, so no federal process needed. A real benefit for us. I spoke about mine life. I think this is an important factor here. Of course, being well advanced and at feasibility level is great, but it also means that you can only use your measured and indicated resource in your initial mine life. That's that 54 million tons in the red and green areas. You can see how nicely delineated it is and how well drilled it is. That's what makes up the initial 11-year mine life. Less drilled, but equally important, is the 79 million tons sitting in inferred. And we mine a seam at the Copperwood project, meaning even though the drill density isn't as high in that inferred area, it's demonstrated the mineralization continues. And there's an incredibly high likelihood of conversion through infill drilling, moving from the inferred category to the measured and indicated category. So we certainly see this project as a 15 to 20-year mine life, and we'll look forward to demonstrating that in the future. So at the same time now, it just becomes about execution. I mentioned, obviously, we've done some good early site work, very strong concurrent reclamation. That's given us real credibility in the region, both with the permitting authority, but also locals in the region, understanding that, of course, we want to bring jobs, but we also want to operate responsibly. We've had the benefit of receiving 22 formal resolutions of support, unanimous, from all local units of government. It leaves us feeling very comfortable, not just about our permitting, but also about our license to operate, and of course, putting our key team in place as we look forward to executing. The other key area where we're spending capital now is advancing our detailed engineering. Of course, having a feasibility study is important. Feasibility studies are not normally at the scale of engineering needed to make a final construction decision, and most importantly, to defend yourself during the technical and financial due diligence of a debt process. So as we speak, we're working to optimize and advance the level of engineering to 40% by year end. That's our critical path to get to a point at which we will parallel the broader financing process. All key contracts are awarded to incredibly reputable firms working alongside our internal team, and we're advancing at speed there. Now, I mentioned, obviously, you need to progress your level of engineering to better understand your project and have a current view of the economics of the project, but you also want to improve it. We had a really strong win at the tail end of 2025, where we redesigned our process plant, demonstrated increased recoveries of about 2 percentage points by bringing in the Jameson cell and ultrafine flotation technology, and also reflecting that we think we can have operating costs lower than in our feasibility study, in part due to the lower power draw of a smaller plant and an optimized reagent mix. This is a really important optimization, and candidly, we are also now working through mine optimization on the mine side in the hopes that we can have some also positive updates here in the coming months. And that's relevant because these optimizations are additive to the underlying feasibility study economics. And I think this slide here is really quite central to the investment thesis for our company. It's interesting. I'm showing you our net asset value at 3 price ranges, $4, $5, and $6 copper. Fortunately for us, spot price today is actually off the chart to the right of here at near 640 per pound. But interestingly, when we did our feasibility study in 2023, it was closer to $4. And what I'm able to demonstrate is that the project works at that low copper price. Nice economics at 170 million NPV and an 18% IRR. But really, it's the leverage to changes in copper price that really drive the upside value. What's interesting to note that today, while we're sitting at a spot of 640, another relevant data point for me is long-term consensus, which has now moved to the 475, $5 range. At $5 copper price, our net asset value triples to 507 million. And then, of course, at six, it nearly doubles again to 850 million. So you really begin to see, asset valuations, moving up from a range perspective with the low end long-term consensus still supporting a $500 million valuation. And of course, as you scale up to six and beyond, arguably into $1 billion range. That's very relevant because as I would have sat here even 6 or 9 months ago, the range arguably was between 4 and 5. And candidly, at a $4 copper price, while the economics work, it's challenging to finance. That's not the case now. When we look at that lower end at a $5 copper price, the economics are robust and, of course, incredible torque as we move up. Those asset valuations, as I mentioned, are based on the feasibility study. In the meantime, we've done a range of things to improve the project. As I mentioned, we've increased copper recoveries by nearly 2 percentage points at lower operating costs. That will be brought into, so incorporated into our updated feasibility study as we come to the tail end of this year. Through mine plan optimization, we'll see if we can increase mine life. And naturally, there are a range of state and federal grants that we're working on that can also add value into the project. And I'll speak to those shortly. But at the end of the day, you start to see those asset valuations in the $500 million to $1 billion range. Our market cap as we stand here today is about 75 million. Note as well that we have about 20 million in cash. So the enterprise value is actually closer to 60 million. Like I mentioned, development stories are often overlooked and one of the later asset classes to move from a valuation perspective. We're finding ourselves in a really positive point in time here. I think 2026, as we continue to execute, will drive incredible value much more closer to these asset valuations that I'm showing you here. Like I mentioned, of course, it is asset first, but at the end of the day, you also have to have your corporate structure in good standing. You need to have a viable structure so that when the market looks at you, they believe that you as a company can execute and finance. So we made, I think, a very strong decision earlier this year where we divested of a non-core asset, the White Pine asset. If you look at before the close of that transaction, that's the left-hand side here, we had 12 million in debt related to obligations back to White Pine. We had about 7 million in cash, and of course, we had 2 assets to feed. And of course, as an investor would look at our company like that, it would be challenging to see how we would have the financial capacity to move both of those assets forward. On the other side of that transaction, we eliminated our debt, have a remaining 24 million in treasury, and a singular focus on the permitted copperwood project to drive it to development. That is a much more viable corporate structure, and demonstrating that capital allocation focus, I think, has been very important and recognized by shareholders. And it's left us with a very clean structure and long-term loyal shareholders. At the top of our list is Orion Mine Finance. They're one of the largest mine financiers globally. They own 28% of our company. They've been invested since around 2018. Condir, a natural resource fund out of Texas, also sitting at 20%, another long-term and loyal shareholder. So with no debt and well capitalized, we sit very well placed to move forward from here. Importantly, that capital that we have in treasury fully funds us to a final investment decision. So that's any remaining site work and monitoring that we're doing. Of course, the meaningful scale of engineering that drives us through the financing process, as well as capital to allow us step into and withstand the technical and financial diligence that we'll see through that financing. So feel very comfortable from that perspective. And we're doing so with a very strong board and management. Perhaps of note, John Cherry is on our board. He's the CEO of Perpetua. Interestingly, you may have recently seen that he converted an EXIM LOI into a binding facility for well over $2 billion. So we have good visibility to how we do well in that process. Steve Hicks is our chair, a very well-known person in Michigan, helping us drive politics and, of course, local stakeholders. And in the last 4 weeks, I've also made two really significant hires, and it should be taken as a very strong signal of our intent to finance and build this project. I've hired Peter Hemstead. He was one of the founding executives of Capstone Copper, driving that company from a very early development company into an intermediate producer. Significant experience through that development cycle from a finance perspective. And importantly, we've taken on a new project director. Her name is Trace Arlode. Her most recent role was as the execution director for Resolution Copper, Rio Tinto's largest undeveloped copper project. So it just gives you a sense of the scale of her experience. Importantly for us as well, she operated in the Upper Peninsula a number of years back, having worked on the early design and development of the Eagle Mine, now operated by Talon. And the last couple of notes here, the other piece outside of execution is demonstrating that we can finance the project. Now, I don't want to indicate that we are solely dependent on federally underwritten debt. I do think we have other options, certainly in Orion and potentially refiners and off-takers that would like to give debt. But I think we have a really solid path with UXM, with federally underwritten debt, arguably at better commercial terms than we might see on the private markets. We have incredible support in DC. That's Congressman Bergman from Michigan. He speaks highly of us in DC. Also, Democrat Senator Elisa Slotkin, another firm supporter of our project. So we are well represented, well spoken for, and I think that's why we have good visibility and are progressing well in Washington. So maybe as a last slide here, Michael, before I pass over for some questions. I think we have been somewhat overlooked despite incredibly positive execution. And you can see this execution is really over the last 9 months, improving copper recoveries from a process perspective, obviously getting our letter of interest at USXM as we now work to converting that to a binding debt product, advancing engineering, restructuring the company with the sale of White Pine, and of course the White House acknowledgement that we have recently. All of that sets us in a wonderful place as we step forward from here, as we look to make a determination on final state and federal grants that we're in the running for, which can both be a strong endorsement and, of course, capital coming into the project. We're currently concluding our integrated mine review with the hopes that we make some project optimizations in the same way that we proved we could do so on the process side. That all leads us to conclusion of our engineering at the tail end of 2026 and what we believe will be a considerably strengthened and updated feasibility study. In parallel to that, in the second half of 2026, we will initiate the broad debt process. The first phase, of course, is to run a competitive process and determine who's interested in providing capital from a debt perspective. We know, of course, EXIM is, and certainly Orion will be as well. We'll run a process to see who wants to step forward into diligence as we step into early 2027. With the goal of concluding the debt financing into the Q2 of 2027. All of this naturally leads to a construction decision, a 2-year construction window, and again, producing copper in the 2029 to 2030 timeframe. So I hope you can see there are catalysts here in the near term, certainly out 12 to 15 months, and of course, with the goal of driving ourselves into production. I do think we're in the right place at the right time, Michael. We're certainly looking forward to driving value and ideally re-rating as other companies have done through 2026.
Well, very interesting, Barry. Thank you for an excellent presentation. You certainly provoked a lot of questions. Let me try and get to as many of them as I can. The first one was someone just looking to have a base understanding of what a construction decision actually means. Who makes that decision and what does it mean in terms of consequences?
So I characterize a construction decision in two ways. First and foremost, board and management need to conclude off the back of an updated feasibility study that we think we're ready to build the project. I feel very comfortable that we're going to get to that point. Of course, the other factor is financing. We can be good and ready to build a project, but we need to make sure that we have the capital in place. So while we make that construction decision, we parallel that financing process that actually allows us then to step into full construction.
So there were a number of questions about financing. Let me see if I can kind of bundle them all together so you can answer them in one go. You have an opportunity with the Exim Bank. I believe there's also an opportunity with the state of Michigan. When would you expect to conclude those discussions?
So yeah, let's talk about that broader debt process. And I'll start with talking about debt capacity. Interestingly, we've historically looked at 250 million. That, by the way, informed the application with US Exim as our debt capacity. But candidly, that was more at a $4 copper price. Sitting at long-term consensus now, we actually see debt capacity closer to 300 to 325 million. Our goal naturally would be to convert the Exim LOI of 250 million into a binding debt facility, but we think there's further room. And of course, what strategically we have available to us is our concentrate to provide out to an offtaker. Often when you grant that to one of the refiners or offtakers, they're willing to give you something in return. And we would similarly look for some debt, arguably in that 50 to 75 million range. As we think about that consolidated 300 million in debt, our goal, of course, through the second half of 2026 is establish who the key players are that we want to bring into the formal due diligence. So we will run a competitive process through the second half of the year. As you understand, then in a similar time frame, we're concluding on our engineering as we get to the end of 2026 with our updated feasibility study. And then you basically run at speed directly into the financial and technical diligence with the appropriate parties in early 2027. Our goal obviously would then be to convert that binding debt product by mid 2027. That puts you in a position then really to step forward with your long lead purchases, construction and operational readiness, perhaps some early site work, and then candidly looking at a full construction in all likelihood in the spring of 2028. So that kind of gives you a sense of the timeline. And by the way, off the back of that binding debt product, of course, any remaining plug from an equity perspective would be filled at that point in time.
Got it. Another question is whether you could provide more color on what exactly is happening with the ongoing engineering work, what it means to lower power costs, and how that would be achieved.
Yeah, so we think about our detailed engineering somewhat in two phases. The first is retrading off and making sure that we have truly optimized mine design and finalizing and landing on your design criteria across key areas of process plant, mine, water management, and tailings. And candidly, three of those four, broadly speaking, we concluded on in terms of phase one engineering by the end of 2026. As we stand here now, we're spending a little more time on that integrated mine plan review. Long-term copper has moved to $5. The impact there is that you can have a lower cutoff and arguably bring more ore into your mine plan. And we're also looking to optimize the mine plan from a pillar size perspective, mine height perspective, broadly speaking, to see if we can convert more of that M&I into a formal resource that can be mined here in the near date without additional drilling. We'd look to conclude on that mine design component here in the next couple of months. And then on all four of those packages, you then progress into the detailed drawings and design to get yourself to 40% engineered. Another key thing that you're doing through that second half is updating all of your capital and operating costs. I've of course mentioned that we'll do our updated feasibility study. In all likelihood, it's something like a $5 copper price. I mentioned that we will draw in some really nice design optimizations that we've been working towards. But to be fair and balanced, of course, there will be some escalation that we've seen over the last 2 to 3 years that will inform that updated capital and operating cost.
We had another financing question come in. Someone was asking if you could give an update on any possibility of a reverse split in your stock.
Yeah, that's something that I continually keep an eye on. I'm very happy with the overall structure of the company from a debt perspective, balance sheet. I'm happy with our shareholders. One thing I don't love, and I think a number of shareholders don't, is that we have 700 million shares outstanding. Fortunately, no warrants and very few options. So again, clean from that perspective. But I think it would be appropriate and probably more reflective of the maturity of our company to have less shares outstanding. A 10 to 1 split, as an example, can be done quite simply without a shareholder vote. That is a target of mine. I will say that shareholder share consolidations also come with some risk, right? That you do a 10 to 1 consolidation and drift back to your older share price. So they need to be done in positions of strength, both from a macro perspective as well as internal execution. I really believe we're moving towards a point where we can do that. Sitting at a $6 copper price, you would think you're in the most wonderful macro environment. But of course, the world is also challenging at the moment with certain wars going on. Investors aren't quite as into risk assets. So we'll just try and find the most appropriate time backed by a strong macro environment at a time when we're also putting news into the market and look to do that share consolidation.
You've mentioned the high copper price, and you showed some examples of just what it does to the valuation of your company. You also mentioned hiring someone from Resolution Copper, Rio Tinto's asset in Arizona, which, as you would know, was just delayed for decades, literally decades, but recently got approval to go ahead. It's a very, very large deposit. Do you see that potentially impacting copper prices by suddenly there's just so much more supply?
You know, I think the supply demand imbalance in the US is pretty stark. And of course, Resolution Copper, in time, can conceivably very much assist with that. But I don't think it changes the overriding story, both globally as well as domestically in the US. There is broadly a shortage from a supply perspective. And every day you look now, there are new categories of demand. Most recently, AI and data centers driving the narrative, let alone the broader electrification story. So when I look at the fundamentals for copper, on a mid to long term basis, candidly, I feel very comfortable. There's an incentive price that allows a lot of these projects to get built, much nearer to where it is today than it would be at $4 or $5 copper. So I feel comfortable there.
Another question relates to environmental issues. Is there anything that would be in the way of actually starting construction, opening the mine? Are there environmental issues like water or air pollution that still need to be resolved?
No, if you take a look at our permits, broadly speaking, a host of them, well, they all contemplate all of the potential impacts of the project, the mitigations that we have, and really some very stringent law in Michigan to make sure that operators from the mining come in and operate respectably. So I feel comfortable there again to have those permits. That said, it is always front and center for us, safety and environment. If you take a look at the work that we've actually done over the last 2 years, it's a really nice story, actually. It used to be, and you could go back a century ago, you impacted land with mining, and it was at a much later date that you were arguably required to reclaim. In Michigan, you need to do your reclamation concurrently. We've done some modest impacts on the ground, and we're already mitigating those. As a matter of fact, the initial site impacts that we done, we impacted, a small, let's say 60 acres of wetland. We were required to mitigate those at a factor of 10 to 1 through creation of new wetland or setup of new wetland preservation area. So, we are doing at a minimum, what is asked, arguably considerably more from an environmental perspective. That's being received very well locally with the local communities and most importantly with the permitting authority that naturally is observing the work that we're doing at site. So yeah, no, excited from that perspective.
It looks like we have time for one more question. Another one on financing. Could you describe of your CapEx, how much you would ideally propose to fund with debt and how much with equity?
Yeah, as I say, it comes down to what the debt capacity is. So that's running your calculations in terms of what you can responsibly pay back and that a debt provider will be happy with. When we do those calculations, it's in the 300 to 325 million range. And that's probably about right. I think traditionally, if you look at the debt to equity split for projects, it's normally in that 75 25 range. And And again, we have a nice pathway to that debt, be it public or private funding coming in.
And another follow-up on environmental issues. Let me read it off to you. There was a story in Michigan Advance about the wastewater permit renewal, specifically that the public comment period had been extended at least 30 days. Can you give any color on how that fits into the overall construction timeline?
Yeah, I mean, so permit renewals happen across the 7 permits that we have. To give you an example, we amended and renewed our air permit during 2025. It went through a very similar process. Similarly, it had its public comment period extended by 30 days. It goes through a virtual public comment period. And off the back of that, Eagle, amended and granted our updated air permit. We're going through a similar process now on the water discharge. There's actually no amendment to that permit, so it's just a straight renewal of a permit that's already in place. One that's really supported very well by a whole host of key environmental studies. As it happened with the air permit, a 30-day extension has happened in terms of public comment. But it has, as you can imagine, limited impact from a timeline perspective. We'll get through that renewal this year in the same we did with the air permit last year. It's not really a critical path item.
Okay, well, terrific. Terrific presentation. Really enjoyed it. Everyone in the audience, thank you very much for your participation. There were a lot of questions. If I didn't get to them all, I apologize. We'll go through them and make sure you get an answer. And very great presentation. Look forward to having you back soon.
Thank you, Michael.
Okay, see you soon.